The last 24 hours in global geopolitics have been absolute chaos. On one side, we have a 48-hour ultimatum from Washington. On the other, global markets are in a state of sheer panic. Are we staring down the barrel of a full-scale energy war? Or is this just another masterclass in high-stakes negotiation? Yesterday's headlines sent shockwaves through the financial world, forcing everything from crude oil to Bitcoin into the red zone. If you track the stock market, crypto, or global power shifts, you cannot afford to ignore this 5-minute breakdown. No fluff, no clickbait, just raw, hard data. Let's decode what happened yesterday. The biggest headline dropped right out of the Middle East. The Trump administration issued a stern warning to Tehran: reopen the Strait of Hormuz or face direct military consequences. Let's look at the data. The Strait of Hormuz is the world's most critical oil choke point. Millions of barrels of crude pass through this narrow strip every single day. When reports of naval blockades hit the wire yesterday, Brent crude prices exploded. But then, a massive twist. Trump announced a temporary pause on strikes, citing constructive back-channel talks. The result? Oil prices, which were shooting to the moon, plummeted by nearly 10% in a single trading session. However, Tehran immediately denied that any dialogue took place, calling it a psychological delaying tactic. This means the tension isn't gone. It's a ticking time bomb. Whenever the word war is thrown around in geopolitics, which asset class crashes first? Risk assets. Yesterday, Bitcoin broke key technical supports, sliding down toward the $67,000 range. The logic is simple. When oil prices spike, inflation goes up. When inflation goes up, central banks hold interest rates high, and investors pull their money out of crypto and tech stocks. Asian markets bore the brunt of this panic yesterday. Indices in Japan and South Korea saw heavy institutional sell-offs as capital fled to safe haven assets like the US dollar and gold. If this standoff escalates into active naval warfare, we are likely to see a massive correction in the crypto space. Now, let's talk about the collateral damage emerging economies, particularly in South Asia. Central banks are holding steady, releasing bulletins stating their internal domestic economies are resilient, but there is a glaring vulnerability: oil imports. If you are a country that imports over 80% of your crude oil, a Middle Eastern fire burns your budget instantly. An inflated oil import bill weakens local currencies against the US dollar and spikes local fuel prices. Foreign institutional investors have been aggressively dumping equities in these regions over the past few days. Right now, emerging markets are under massive pressure. Modern geopolitics isn't static anymore. It shifts by the hour. Yesterday, oil crashed. Today, it might spike again. The world is watching the White House's next move. But while the media hyper-focuses on the Middle East, the real quiet war is happening in the Pacific. China is rolling out massive automated AI agents that are designed to challenge Western economic supremacy without firing a single bullet. Thanks for watching. Don't forget to subscribe.